Yeah, Scott. So clearly, first of all, I'll say I believe in the Target story. They were flawless, in terms of from an operating perspective through the pandemic. I think this is just a responsible note from Brian, in talking a little bit about the outlook going forward and what he sees. Clearly, when we talk about margins, a revision to the guide from 3% to 2%. But I really believe that this is a one quarter issue. When we're talking about inventories are obviously up, they're going to cancel some orders. There's going to be some markdowns here, which could be some concern there. But he also talked about margins will get back to 6% by the end of the year. So I'm feeling very comfortable with the call. I think that Target can move through this. I think for the greater picture, when we talk about the consumer, I think the consumer is still healthy. And it has been a mixed bag from a retailer perspective and looking at different names and how they've responded to this environment. But I believe in the management here, and I do think they'll move through this pretty well.
Steph, you're a shareholder, too. This is essentially feels like Cornell just kitchen sinking it on the margin issue.
Yep.
And the inventory. And maybe that's why the stock has recovered to the magnitude it has. It was down a lot more than near 4%. It's down 3 3/4 right now. So what's your read here?
Yeah, I mean, I wasn't surprised to hear the news this morning. I was very surprised to see it down 10% in the pre-market because we knew all of this already. And it's not good news, but here's the thing. Retailers are holding 20...
Right? Didn't know it was this bad,
No, yes, you did. No, you did. You did. They had 75 days worth of inventory. That's what they told you last quarter. So they have to work that down. So... to me, the margin is a disappointment for sure. But I mean, the narrative is not surprising because, as I was mentioning, retailers are holding 20% more inventory than they have in the last 3 years. And at the same time, consumers are shifting their spend from goods to services. How many times have we talked about this in the past year? We just recently got the GDP revision that showed the same thing. The ADP showed services were doing really well. So that's the theme. But the fact of the matter is the consumer is still spending, and they have $2 trillion in excess savings. So to me, this is a one-quarter hit. This is a clearing event versus, by the way, Walmart said it's going to take 2 quarters for them. And this is going to be very positive for the consumer because you're going to get lower prices. At the same time, they reiterated total revenue for fiscal 23, which is this year, low mid-single digits, operating margins, as Jason just mentioned, to get back to that 6% guide that they said in the second half of the year. And they're going to be spending on food and beverage, on household essentials, on beauty. Beauty is a very positive data point in the retail spend that we just are seeing here.
So I'll come back to you, Steph. I mean, how do we know it's going to be just a one-quarter thing, right? That's your take. That's Snipe's take. And that's fine. I respect that. Narratives that you talk about can only take a stock so far, right? At some point, it's about the margins, especially a retailer. It's about earnings. And what if it's a longer turnaround, Steph?
I think he's kitchen sinking it. That's what I believe. He has a flawless record in terms of execution. A 2% margin is horrific. Horrific, right? From 7-8% that they were guiding to just last year. So they are going to be aggressive in promotions, aggressive. And I think they're going to be even more so than Walmart. And so I think they're going to push back on their vendors. And I wouldn't touch a vendor at this point. In fact, you asked about other companies and who would benefit. The off-pricers are going to benefit substantially from all of this massive inventory across the board.
Yeah, we're going to get to that, too. Doc, you sold your Target calls. You sold they were worthless, obviously. You sold your Target puts as well, which you owned for about a week.
Yeah, we had strong put activity in this name. You know how Pete and I hate to bet against Brian. The CEO, of course, Brian Cornell. But in this case, you could, and I know Pete had a conversation with Mr. Cornell about this. You look at the parking lot, Scott, and you compare them to other retailers, and it was night and day. Now, that's not saying, oh, we're brilliant. We saw that coming, and Brian's the guy that runs the company. He sees that, too, over, hundreds and hundreds of stores. So consumers, to Steph's point, were not willing to pay those prices. They will be willing to buy at lower prices, which will likely continue all the way up until back to school. And then the question is, okay, did we work through enough inventories? I agree with Steph 100% that we're going to be seeing TJ Maxx, Kohl's, Dollar General, Dollar Tree. You're going to see all of those getting inventories from some of these majors, and those will be the ones that will be far more steady and better on the outlooks than will Target and Walmart and many of these that are stuck with these big inventories, Scott.